Hello, I'm Jason from the Mortgage Brain team. Today I'm going to talk to you about the challenges faced by paraplanners and administrators during this sales process. We're also going to look at some of the challenges that lenders are facing and the impact that that's having on the marketplace and you transacting with lenders. And then we're going to look at what you can do to minimise those delays and what tools you should or could be using to avoid any nasty surprises later on in the process. So, looking at the issues and challenges that advisors, paraplanners, and administrators are facing at the moment, can kind of be summarised as, from a criteria point of view, which is probably the biggest change in the marketplace at the moment, where we're seeing lots and lots of changes on variable incomes being ignored, or the amounts being accepted and being reduced, particularly on things like overtime bonus and commission and those other sort of variable income sources. Of course, applicants on furlough leave, that's having a big impact in the marketplace, with lenders now, with in some cases, not lending to people who are on furlough leave, and the ones that still are, maybe requiring letters from employers stating when that person is going to be coming back to work and in what capacity. And we're also seeing lenders change how they assess self-employed individuals, and that's quite a big change that we've seen there, and we'll come on to talk a little bit more about that in a short while. And of course, that's in addition to all of the other criteria changes that are happening each and every week. There's things like sort of property types, such as flats in tower blocks, and certainly on the Criteria Hub platform, we've seen a fairly big spike recently in search activity. I think July or August, I can't remember which one, but it was the best month that we've ever had in terms of search volume. But in addition to that, we're also seeing a lot of affordability changes from lenders. What was affordable maybe 2 weeks ago may not still be affordable today for the same set of circumstances. And what we've seen since the launch of Affordability Hub in May, I think we've sort of had roughly 40,000 searches, residential searches go through the system, and we sort of measure what the average rate is that a lender comes back affordable on those searches, but also with a qualifying product. So the two things: is it affordable with this lender? Do they have any products that match what the broker has looked for? And the average rate of success on that is just 30.16%. So it really does highlight some challenges and the importance of using some of these research tools that are at your disposal in order to successfully place these cases. One of the other huge problems faced at the moment is also service levels, and this is a really tricky one. We just launched a service level document that brokers can download, or anybody can download it for that matter, on a daily basis, and it highlights the service levels when trying to contact a lender, but also the service levels for lenders processing cases. So two things that we measure are time to offer from application, and also time to initial assessment of a case when it first comes in and lands on a lender's desk. But certainly from the service levels when contacting lenders to discuss new cases, we're seeing average wait times at the moment of around about 6 minutes. And actually, if we actually had data for all lenders, because not all lenders publish these service levels, I suspect that number would actually be an awful lot higher than that. And of course, products availability. So 85% is definitely the new 95%, and with things like tranche management and product booking, it's difficult for brokers because you have to be on the phone at a certain time in order to secure funds to secure the product for your customer. So lots of frustrations and difficulties for you guys at the moment, and that's just for placing a case. But of course, that's not the end of the role, particularly for you guys. The work, you could argue, really then starts when the application has gone into a lender and you have to start to administer that case. And again, this literally just comes down to service levels, and as part of doing this service level document, we can already see that whilst there are a few lenders that are still able to get close to 10 to 15 days from application to offer. Actually, there's some lenders that are at the moment taking up to 2 months to go from application to offer, which is an awful long time. Not anybody's fault, it really isn't. It's just a consequence of the situation that we're in. And that kind of leads on quite nicely to talk about, as much as about the issues facing brokers, also the issues facing lenders. And what they have to contend with is an awful spike in business. Rightmove recently announced August was their best month, or busiest month ever on record. And that will be due to pent-up demand, and also the stamp duty break that the government has introduced. Those two things have really meant that there's lots and lots of activity in the marketplace at the moment, which is putting lenders under a huge amount of strain. Add to that, it's taking longer to underwrite the cases now than it was pre-pandemic. So not only are they getting more cases coming through the door, it's taking a lot longer to underwrite those cases. To give you an example of that, I spoke to a lender just a short while ago, and we were talking about some of the challenges facing lenders, and the chap I was speaking to told me that ordinarily it would take an underwriter 40 to 50 minutes to underwrite a self-employed applicant. At the moment, it's taking 3 to 4 hours. That's a huge difference, and puts a real strain on the capacity of how many cases an underwriter can look at in a single day. The reason that that's taking so much longer is because typically when you put in a self-employed or an applicant who's self-employed, you're going to send in an SA302 or the accounts, or get an accountant's reference, but that's going to give you figures that could be up to 18 months old. What it doesn't tell the underwriter, which is more important than ever right now, is how is that business doing right now? Have they taken any government assistance, particularly part 2 of the government though? And is the current turnover still in line with what it was, or at least close to what it was, 18 months ago, two years ago? And these are questions that underwriters are asking right now. So one of the things that, one of the first tips that I would certainly give anybody in the advisor role at the moment, or a paraplanner role, is very much to, when you're talking to self-employed applicants, you really need to think like an underwriter. What is an underwriter going to ask me for this particular client who's self-employed? And certainly those two things as a starting point. And I think there'd be real merit in anybody who's self-employed attaching a one-pager rationale document that goes with that application. And they might not look at it, but I would guess that they probably would, and would find it very useful if you can give rationale as to current state of play for that particular business. Really helps the underwriter make a decision about whether this is an application that can go through to offer or has to be declined. But the more information that you give the underwriter at that point in time when they're looking at the case, the better, because if not, they're just going to ask for it anyway. And if it's taking them 2 weeks to do that initial assessment, which quite often times at the moment it is, they're just going to come straight back to you and request that information. You've then got a delay as you go to the customer. All of this stuff could be asked for up front, packaged together nicely, and given to the lender at the right time. So what other things can you do to combat some of these issues that you're facing at the moment? We're going to look at what you can do sort of pre-application mainly, but also a little bit about how you can minimise the amount of times that you need to contact the lender during that administration phase. A couple of things, first of all, just to sort of highlight, just as general good practices. Communication with clients, the most important thing. I was always a fan of calling the client when you've got nothing to tell them. Just keep them up to date regularly. That's going to prevent them calling you. As much as lenders don't want you calling them at the moment, it should be the same for brokers. Brokers don't really want customers calling for an update if that can be prevented by you being on the front foot and calling the client when you're ready to call the client with a bit of information, or even if you've got nothing to say, as I said. The downside of that is if a client is calling you, obviously they are probably, they're probably going to initiate a task for you to go off to satisfy your customer. It's just going to turn you into put you into more of a reactive environment. And the other thing is the big message I would see and tell customers at the moment, particularly customers that are looking to buy property and are out there in the field looking for property to offer on, definitely they need to be calling you just before they put that offer in, just to check that nothing has changed. That's super important. We recently saw one of, if not the biggest lender in the UK, withdraw all lending above 4.5 times income, even for applications that were in progress that hadn't offered. And this was due to them getting close to exceeding the amount of lending that was being lent at above 4.5 times income. And a PRA limits 15% as the amount that a lender can lend at above 4.5 times income. And because this lender was getting close to that, it just had to withdraw it and just pull it back. And the reason that I think happens is because lenders, a lender might lend at 75%, 5.5 times income, whereas at 90%, they're probably going to limit it at more like 4 to 4.5 times income. Well, of course, at the moment, we haven't got much high loan to value products in the marketplace. And so if lenders are still applying those more aggressive income multiples at these lower loan to values, and they're getting more of that type of business simply because they're not getting that percentage of other business, then that's causing that little bit of imbalance, if you like, and which is testing those PRA limits. But the takeaway here is it just highlights the importance that if you've got clients who you've discussed affordability with 2 weeks ago, and then they've gone and made an offer today on the back of that, then that affordability may have changed. The lender may have just changed how much they're lending at the moment. So a quick check-in, quickly run the affordability again, and then you're going to give the client the best chance of having a successful journey through to completion. Again, we've got the tools. The tools are available in the marketplace for you now to do that very quickly. The other thing, just to mention, just as a general good practice, log every conversation you're having with a lender. It's a good thing to do at any time, even more so at the moment. Just make a note of who you've spoken to, when you spoke to them, and what the contents of the conversation was. Hopefully you won't need to reference that at a later date when talking to a lender or a customer. But in the event that a complaint comes in from the customer, the more you can do to back yourself up, the better position you're going to be, and you're going to have more chance of preserving that relationship with the customer. So other tools that you can use. Let's have a look then. So during the research phase, it's some of the questions that you really want to be asking at the moment are: is speed important to your customer, or rather, does it matter to your customer if it's going to take 4, 5, 6 weeks to get a mortgage offer out? All things being okay, in the case being packaging required correctly, best case scenario 4, 5 weeks, 6 weeks. Is that okay? If the answer is no, then you need to be picking lenders that have got a better chance of processing that application quicker, and that's going to obviously apply to purchase applications. Does your client have any variable income? Particularly things like overtime, bonus, and commission. As we already spoke about, are they self-employed? That's going to take, require a little bit more close scrutiny. Is your client on furlough leave? If they are on furlough leave, do they have a known date when they're coming back to work, and will the employer put that in writing? And then, whilst there's not really much you can do to reduce the time it takes to get through to a lender to progress these cases, you can ensure that there's no delays as a result of something that you've not done. So the advice that I would give there is, when you're filling in applications, fill them in 100% completed, and don't leave any to be confirmed in an address field or anything like that. It's just going to cause a delay. The one thing that you don't want at the moment is any delays, particularly if it's taken 2 weeks for an initial assessment. If the lender comes back and asks you for a bit of information that you could have included on day one, you could potentially put yourself back another 2 weeks. And know what the packaging requirements are as best as you can up front. Know what the packaging requirements are, what documents you need to send in what format, if they need to be certified, exactly how do they need to be certified. Just avoid the silly mistakes, the things that are preventable. So again, we, as part of that sort of service level, when the lender carries out that initial assessment, we really want them to have everything that they need at that moment in time. So as opposed to them going halfway through the case, finding something that they need, and then worst case, just saying, I need this, and then you send it and you're to the back of the queue, they've got everything that they need ready to progress to the next phase, whatever that is for the lender. It might be to approve underwriting, to instruct valuation. It might even be at that point to produce a mortgage offer. Make sure that you're not getting in the way and that you're not causing any delays. And then what tools can you use to help you? There are loads now, more than ever. So when I started advising, and in fact, even just 5 years ago, uh, the only real research tool you had was product sourcing. But in the last 5 years, you've now also got criteria sourcing and affordability sourcing. So all three areas of research that you do can now be done via these new tools. They're relatively cheap, but they're incredibly powerful. They save you so much time. And keeps you up to date with criteria changes. It ensures that you can run affordability across multiple lenders instantly, and it's a breeze to go back and just recheck affordability at a later date. So definitely leverage, use those tools. They're available to you today. And service levels is the other thing. Just now's a really good time to understand what those service levels are. And there's nothing wrong in including or excluding a lender based on their service levels. To my mind, if time is really important to a customer, then that's a good justification as to why you've chosen a particular lender, maybe when they don't have the best rate. So understanding what their service levels are upfront is really useful in helping you to decide where to put those cases. Service levels are generally not published wide scale that you can see them like you can with sourcing, but we've now put together a document that can be downloaded every single day. It will be updated every single day. So for the lenders that do publish their service standards, we will have them on that document. And as I said before, that will include call waiting times, live chat waiting times if they publish it, if they've got live chat, also time to initial assessment and average time to offer from application. Really useful stuff. And hopefully it will encourage more lenders to publish that information going forwards. And then finally, just a good old-fashioned AIP for your customers that are looking to do purchases. Get an agreement in principle just to help them out when they're having a conversation with the vendor and the estate agent, and they're looking to put those offers in. The more variables that you've ticked off, the better chance that your customer has got of being at the front of the queue. And that really concludes it. Hopefully it helps. I'll stay on the call afterwards, and you're welcome to talk to me about Criteria Hub and particularly Affordability Hub that we've recently just launched, and these new service levels and anything else that you think I might be able to answer. Thank you very much. Bye-bye.